Okay, Tuesday, 9 a.m. Um, going to run down futures charts here real quick and give you my psychological take. Um, we have non-farm payrolls on Friday. It should be a blowout number. Consumer confidence is at a 17-year high. If my math is right, that's 2,000. So we're working on the end game here for equities. Then the other one is we have wheat coming down, beans going up. We need to kind of watch, and also natty gas is coming down. Need to watch for reversals for going into seasonal here. We're in going to be starting November. All right, 6A. This is Australian dollar. Also with the Canadian dollar, basically it's telling me looking forward, they don't. They don't expect commodity prices, right? Australia and Canada, commodity related. We have breakouts in Brent and crude, but the currencies in that are going in a different direction. I haven't checked on coal. There was a nice website from the RBA, their central bank, chart pack, rba.au, and just search for that. And you'll get all kinds of charts, G10 kind of thing, Asia, whatever. All right, so basically Australia, same thing. The dollar is going to get stronger. That's why I expect commodity prices to come down. Plus, it's also cyclical every 3.5 to 4 years or so. If you go back and look at soybeans through the 70s, you'll see a noticeable pattern. British pound, that and the Mexican peso were best bets for 2017. Okay, since the beginning of the year. Looks like we're coming up to this area. We did approach, what's this, 133? We did approach, back to the 140 area, so we're working our way back to where Brexit fell apart, or the pound fell apart with Brexit. June of last year, 2016. All right, so I expect some selling to come into here, maybe option-related type stuff, short term. Canadian dollar, right? We got a breakout in oil and Canadian dollar the other way. This is shallow. Okay, so we're finding eager sellers in this area here. Here's the happy place. This is point of control. Think of it as like the bell curve. As you see, we'll get into it, bonds and stuff came back about 50% on here. So if this does hold and slide back through here, I'd expect just a 50% bounce. But that would have to go along with for probably Friday's numbers, because they're just going to shake the tree here. Wednesday I'll be here all day. Sometimes I'm in Las Vegas on November 1st, but I'll stay in Havasu. The summer wind is definitely blowing out. All right, so here's E. So this was last week's news-related event there. That was a decent short area, came back down. Now we're the whole beginning to bounce up once again. If the dollar is going to go higher, the euro is going to go lower. I think the move, it was a pretty good move from like 109 area to 120 change, and so that's, to me, that move is pretty much over. Let's take a look at a daily real quick here. What I really wanted to do is look at equities and debt, but currency is a huge. All right, that looks like crud. Okay, so 121 we got to about. It looked like we did a head and shoulders. Yeah, more crud. Looks like a head and shoulders on here. This guy's all light up. Probably not. Everything else does. All right, so we got a lower, blah, blah, blah. Here's a bigger head and shoulders, right? So if you measure it from the neckline, 116, 125, 500, back to about 111. So we're back down into this area. Like I said, the short side, I'll look at weekly. I prefer weekly charts, just because when you snag something, it breaks out, continues higher, what have you. Just stick with it. Possibility of a retest across the tops here, but as you saw, it was even higher. I think 150 something offhand. Yeah, 149, 154, somewhere in there. For the all-time high coming off of, I think, 97. Yeah, we only mention a number 3 times a decade. Sometimes you forget. But I haven't been in swinging this here for about 6 months, so it's like changing strings on a guitar. And you have to tune it. Alright, so we're back into here. Yeah, alright. For the best for the bulls, you could say that this is a breakout now, or a retest. Retest the breakout area. It's a little bit deeper than I'd like to see, but it also is pretty low down here, 103. So 104 to 121. So about halfway back or so, 113. Today's Tuesday, so we're whipping them up for Friday already. Okay. If we get the same type of pattern with a gap again, the angle of ascent for equities is going to increase sharply. You want to own your NASDAQ type stuff, growth, little crap. You know, at the end of the bull market, all the crap will be moving. You know, everybody that's been shorting since, you know, they could short, will feel the pain. And then insanity will ensue. Just complete logic right out the window. My grandfather, and plus history, I think 68% a year or whatever. It all comes down to compound interest. Give it 30, 40, 50, 60 years. By that 60th year at 3%, you have some serious exponential going on. All right, okay, so Japanese yen. I kind of like the long side of this one. First off, I'll have to find the data and make sure it's clean. But Japan strung a couple of quarters together. All right, they're also being used as a carry trade, but just in general, if anything should go, I mean, what I'm looking for is that Wednesday things will be kind of quiet, I'm hoping, and then that way IVs will drop, and then they'll be able to smash through and whip it on Friday. You know, what's a good number? That's a bad number. You know, too heavy of a number. Does that scare people with interest rates and bonds falling? But I'll take the long side on this one here. Long, what do we got? Long 0.05. No, 008. 820. Yeah. Not even a penny per yen. Okay, we'll say long right there. Here's a happy place here too. Okay. It swiped, you know, the lower lows were getting kind of, it wasn't as, you know, pronounced as here. All right, swiped and then went up above. So here you took out some shorts, so now we're coming back. Okay, so you actually got rid of both sides. You got rid of the shorts, and the bottom fishers would probably pitch up to here, right? Okay, so we're back to here. So we need fresh people, you know, either fresh longs or fresh shorts to push this. Because to clean up both sides for a short term. You know, we're talking a week. Oh, we're back to this game again. That would be... Alright. Look at that. I give myself 54 seconds to get out of bed and check the screen. Actually, I just roll over. I have screens on both sides of the bed. Siri? Sell. Kevin, fat bastard. All right, so what do we have here? Okay, so I have to go back into this here. We'll have resting orders here by. Okay, you just have resting orders for the Mexican peso. Buy again. All right. Like I said, the British pound and the Mexican peso, number one for me. Oh, look at that. That was the earthquake. Okay, let's take a look at this real quick. Okay, yeah, 2017, the Mexican peso and the British pound. Best bets. Okay, so, and the volume's dropping off here, so this is probably good. My God, that was the earthquake. Crazy. Yeah, that was late, too. That was after midnight, I think, for New York time, right? Yeah, just crossing over. And I wrote it down on bonds too. Holy buckets. Wow, that's a pretty good mark, Kev. Taking notes. Taking notes. Alright, so this would probably be one in my Forex account. Alright. Alright, so I need to short what we have here. Mexican. There it is. So we go back to shorting and we collect interest. And we're talking 118.80. So what's the profit off of this one here? 80, 20, 3,200 pips here. Okay, I need an alarm though. Come on. Alarm. Create an alarm. Alert. Whatever. Down. First round of profits. First round of tightening stops. Fade bounce. Yep. Or add on the breakdown. Moving average, that'll do the trick. I just threw the moving averages on here as a lazy way of drawing a trend line. Comes down to here, so it's a bit short. And bounce back up. We have 1910, so 1911. Fade again. Fade away. Fade 19. Alright. Okay, moving on. Alright, oil. Okay, so we have, let's go back to this real quick here. These are monkey bars and toss. Go to daily. Take a look at it. Alright, so this is the happy place, I call it. Alright, so this is the bell curve. So 55 and change, video from what? 5-8 days back or whatever. Okay, so we're at a $5 move. Alright, so we're talking about what are we going to do about profits and stuff. We're doing the 2.5 year high, I think it said. So the next happy place is up here at 64, so that's another $5. So that's $10. Now this is when it'll probably get interesting. The talk will probably pick up, just like it did with Bitcoin today. Bitcoin is getting a lot of talk. Oh, you little bugger. What does this happen to me? What's this button do? Silent mode. Yeah, that'd be kind of cool. Oh. 1 item 12, 1 item 12. So this would be the... What? I haven't even had enough time to play with the Apple updates. Well, how do I get rid of... How do I search? This commercial brought to you by... Come on. Settings. Shut up. Don't bother me. Oh, now you're really going to take me off. Come on. Where is it? Alright. I'm not happy. I'm not happy. I get to turn it off. Oh. It's even funnier. It's the other iPad. They're all on both one side of me, not on both sides. So, yeah, that would be operator error. How come we're flying in circles? All right. So there's the happy place up here with Brent. That'd be your 3 or higher, so or whatever. I don't have the months on here. 16, whatever, blah, blah, blah. I'm just telling you there's another, well, I suppose, what's that, $4. Okay, so it'd be about $9 coming off of here. We got the breakout. There is the pause going on. I'll just do this one for crude. See, there's not a lot of air up here until the happy place of 14 at 75. But we're going to, I think I looked at the commitment of traders last week with that the producers are buying futures contracts, which means that they're not going to drill and stuff, right? The producers who are selling the stuff and say, hey, I'll sell it to you for this much more, then all I have to do is move and then be trucking and rails and stuff. So this one here is 58.26, so that's another $4 to the happy place for a 3-year high, and on crude oil here. So we got that one out of the way. Yay! We'll go to 24, 21, whatever. That'll work. Okay. And then, of course, the next one's up here. By then, oil at 75, that will definitely attract the attention of the Federal Reserve. All right, so crude oil, we have the little pause thing going on here. We have kind of the head and shoulders deal, short term. This is a, I forgot about this. There. So where's my time? There you go. Good time. All right, so Sunday, Monday, Tuesday, and here's last week coming off the weekend. So from 51 to 54, it's $3 in here. Okay, so even if you pull back $1, it's a 1/3 retracement, right? So we'll just say that. I'm just the breakout and what's all above here, like 55 Fibonacci number, blah blah blah, yada yada yada. It's already moved here. If you get a couple more bucks, then I'd start looking to kind of like write some options and then go hard the other way, go out to 1919, 2020 kind of thing, and go back below 50, right? Because I'm going to guess that this is going to be spec driven. Look at the commitment of traders again on Friday. Crude ski. Okay, so here's the ES deal. All right, so what it was I didn't like this shallow, this unstructured, icky-looking wave here off the bottom. I did point out that, we swiped the lows here, so logically you swipe the highs. You got it, and came back into this area. So this is a larger pause on a swing higher because psychology is consumer confidence is at a 17-year high, so they're just indiscriminately buying. Okay, I notice it too. I'm getting more 50s and 100s. The breakout on here, I think we looked at yesterday, is, let's say, a little under in the 26 area. You can have a 30-point move on Friday. We're only talking at, what's that, 1-point-something%. Okay, so remember that as this gets closer and closer, I think I have a target of 47.50 by 2024. Oh, which one are you? Why do I have all these alarms going off at 9? Oh yeah, football. There's nothing like being a 2:30 a.m. bartender and have to get up at 8 whatever, right? Oh, daylight savings time. Or standard, or whatever we're going to go and do. Daylight savings, right? Winter? Oh my God. Living in Arizona sometimes out to 370 days a year. Embellish. I'll make it up as I go along. All right, so I have to remember that we're at the end of October. All right, I'm going to follow through with this here. The Russell's coming up to, and the NASDAQ's farting on the upside. So, like I said, just put some numbers down here. You can have a 30-point move, which would be what? Dow up 240, which is basically nothing. The Dow looked kind of oddball. Gold here. Okay, so do I have a pitchfork? Pitchfork. Oh, where's my pitchfork? How do I do this here? Boom. Boom. Do I have to actually hold this? I'll cheat a little bit. How about this one? That'll be fine. Okay, so we have a pitchfork thing because we went down below here. We failed to get up to here, but it's just a gut thing. All of a sudden, what about this one? If gold reverses at 70, goes up $10. Here we go. Here's a freebie for you. Put your stop, whatever, here, or here, whatever. Okay, so let's take a look at this here. 70, 66. So it's a $400 stop, or add. What you could do is buy it come through here. One tick above this. Yeah, do it. Set an alarm. Credit alert. So this would be gold. What are we talking about? 78 from 70 plus $800. Okay, plus $800. Okay, risk $400. $400. Else add. Also add on upside breakout. What do we got for numbers? 83. We'll say 83 from where we're at 70. $1,300. So $1,300 on one, and the breakout is 8. I said is 5. $2,300. Add on breakout $1,800. That's the one from 70 to 73 is $1,300. And then $500 in the secondary breakout. You buy the breakout, you add winners at 78 to 83 is $500 for a total of $1,800 bucks. There you go, freebie. All you have to do is just run gold. We'll see how it pans out. Equals $1,800. Alright. At or above. Yeah. Yeah, I'll leave it at that. Alright, so now I need some alarms. What do we have? That's 2, so this is a warning to start taking profits. Tighten stops. Just basically move it out. I'm kind of a 1, 2, 3 type of guy. You buy, you know, like say, buy here, in the breakout. You're adding to a winner, right? This one here gets a little more risky. I was a floor guy, whatever. Yes, I do get rewarded for doing stupid things, but this is the story, right? It comes down and reverses. It didn't take out here. It took out here. It won't take much to swing it back through this way. And then all of a sudden you get, you know, you might get 88. So that's $1,800 on that one. Plus 88, there's another 10. It's $2,800. So gold would be one I'd probably watch tomorrow. 2-hour chart right now. And these are extended monkey things. And there's just some shadow area. I think 70% of the trading area. But yeah, I kind of like this here. Set an alarm. I got to send this out. All right, buy gold. Okay. All right. Hogs here. Seasonal? No. Yeah, they dump in October. I gotta get my seasonal book out. Yes, I get to the seasonal data again. Yay! Okay, copper. Holding at 3, similar to like crude or natty gas here. It's gonna have to look at a bigger pattern. Alright. Oh, you guys. Holy buckets. Just have the maid come in here and wake me up. Alright, so it looks like a possibility of a bear flag here. You're like, what? What do you see? I'm like, okay, possibility of bear flag. The dip was a little bit deeper. When you're shallow like this, it means they're eager beavers, okay? The little bit deeper ones means they lost all of this on the way up. Then they gave it a push, and they barely scooched above the high here. So I'm going to take this as a bear flag and copper down to like 260 from here. That's $70 times 25 is what, 37.50? Whatever, my math. 50, no, 4, 2, 27, no. 25 twice is 50, yeah. 25 times 8, you said, right? 17, whatever. Even basic math is bad, Kevin. You have 8 quarters. How much do you have? $202. Oh my god. No, you don't. You have half a pound. Whatever. I make it up as I go along, folks. Okay, bear flag here in the copper. That's all kind of treated for right now until I look at monthly charts. There's another link I need to give you. MRCI monthly charts. All right, our heating oil is breaking through. Gasoline falling apart. I'm watching for reversal action here. If heating oil is going up, oh, that's going to be our diesel prices for people moving the oil. We're going to have more trucking, right? Because also seasonal. Oh, whatever. That's fundamentals. I don't have time for fundamentals. Which, of course, I want the data anyway. Not to overthink. These are futures. Maybe it'll take 6 or 9 months to roll over. They say the stock market is 6 months looking forward. That's pretty good. The majority of people just wake up in the morning and peck on the ground. Alright, I need to watch this guy. So heating oil and gold. Need to watch gold for reversal. Okay, so heating oil, we got the breakout here. So a little bit short, 30 cents off the high times 240. Now 420. Look it up, Kev. Heating oil. Futures. Heating oil. 420. $3,300. So, Okay. Alright. So I'm just trying to figure out the risk there. For $3,300 on margin and 420 per tick on here. You know, is that a dime? That kind of thing. Well, a dime wipe you out to 7 or 8 cents. And then, but this one though, I need to go to a weekly, figure out where we're at. We're at the moving averages. Oh, look, you put in your short there. What a good boy. Oh, because of the line. Whatever. Oh, you did the double top too. What was this, July? Okay, well, you're definitely out of that soon. And that contract too, not December's. So what do we got? July. And still have the data? You do. It doesn't show it. Well, that worked. Okay. Alright. Oh. Turn those all off. Alright. Okay, short again here. How about that? Where are we at? Yeah, there's a short right there. How about that short? Write it down again. 188.06 is fine. 05, 04, 03, something, just anything. Alright, wheat came flying down. Okay, if those are going to be consumers, I guess, of this Kansas City wheat here, kind of go into it because of, I'm looking at it, will wheat lose $2 in the next 4 months? You know, your risk is, 25 cents, 50 cents, just due to the inefficiency of the trading. All right. If you buy here, you miss the bottom by, a few pennies, but a few pennies here, a few pennies here is, 4 cents, 5 cents, a nickel. That's up and down. There's a nickel there and another nickel here and another nickel. You know what I'm saying? So you only get the bell curve of the trade, which is fine. Yeah, I lose this and I lose this, but I get the bell curve, right? Okay, all is good. All right, natty gas. Need for you. Yikes! I need to clean this desktop and make a folder. Coffee. All right, so natty gas is coming back into this area again. My alerts all went off, so I need to flag something. What I thought was interesting is my little, what is it called, change, whatever change you have left over, Robinhood, when I scan for stocks under $3. You trade something on Robinhood and you have some extra cash left over. Buy a share or two, whatever, 50 cents a quarter, whatever. But you build a big portfolio. Holy buckets. Gonna get some sleep tonight? Yeah, right. Ball game. It's in the 23rd inning. No. No, I just lay in bed, I suppose. Yeah, I'm gonna get up early. Crap, Friday. Alright, so. Okay. So we're back down to this thing here. Why don't I do this? Well, let's do it this way then instead. That'll solve a lot of the problems here too. Alright, so natty gas here is below the happy part. I want to go to weekly on this thing. Natty gas hit a 17-year low. The irony, right? Consumer confidence is at a 17-year high. Alright, there's a lot of area down in here. Percentage-wise, it's huge, but remember, for your thousand. What I would personally do would be write naked puts to get long. Okay, the downside there is that kind of limited on the deferred, how far down the ladder, or up or out. Out you can go. Okay. So, I think there's my NQ. Looking for in theory, this thing should just, if it clips this here, it should just be dot. But I'm beginning to see kind of volume wanes on some of these indexes here. So not everything. That's what I assume they're going to be. You're going to have them both scared and then over, if you whip them up to a frenzy today about Friday, because you have a couple of days, people are going to be, hey, I got a couple of days. That's the fallacy. The move is, why did it come down? It's because it already moved up all prior to it. They sold into obvious news. All right, so kind of like the old hedging thing up in here. I think it was 6,300 Wyckoff had. I believe, whatever. Just watch it. Just, you go up, you come back down. Is it going to come back through here? You go through here. If it comes through here, you're selling down to here. If it comes up, actually, if it comes up here, I'd only test it to here. I went press my luck. 4 cents in gasoline. What's that? $1,000. Oh, 420 twice. Oh, Kevin, don't start this game again. What's this one here? The Russie? Okay, so the Russie's kind of stalling here. Also, I wanted to show you the Dow, and then I'm going to fly. Silver, okay, just like with gold, reversal on here. How much is silver? 67, 69, 70. We'll say 70 to 74, 17 cents. Holy bucket, 17 cents. 18 is 9. It's $900, we'll say. Come on, faster, faster, faster. Price on alert above. That was a quick 19 cents, 17 cents, we'll say, for $850. Okay, where do I want to buy it? 72 to where? Oh, if we buy, where's my 15? Give me 15. Alright, so above here, let's say this. So this to there is 11 cents, so that's $5.50. So if you buy it in here, 68 to 88. Alright, it's 20 cents or a grand, so we'll just kind of sneak it in here. Let's do it this way. Buy silver is good for 16 cents or $800. Close enough to the last one, Kev. Buy silver. Buy silver. What is it? 72, but they won't have time to move quickly. If I put this in 71.5 would be nice. For profit of, we'll do 3. Profit of 88, 15 cents. Buy silver for profit. 15 cents to sell. Sell. What is it? 1688. Boom, boom. There we go. And that'll probably happen today. Okay, notes and stuff. All right, so we broke down. Okay, so confidence levels at a high mark, right? Okay, so these are notes. All right. Talked about taking this part of the whole Friday thing. Long the debt, go against, it's kind of a hedge against stuff that I already have short. I think March stuff. This is D's. We got the bounce. Okay, so there's, it comes down to if the number's soft or stocks roll over, we get some follow through. So the hedge is kind of like, well, if anything, the numbers blow out for non-farm payroll on Friday, then I would expect this to come lower. Can you have bonds fall, notes, stuff, 1 to 3 points? Yes. So here's the deal where the numbers, they were talking about December, and all of a sudden you get this. So you can get people who can get wiped out. So this is kind of like we also have a seasonal here where interest rates go lower into the holiday season because warehouses are full of stuff. They have to float money. We're awash in money all over the place. Then that's where the inflation will kick in when Mother Nature does it to us. Volatility index did come back down through. It dinged. I sent where are my messages? All right. Yes. Okay. It came through earlier this morning. All right. It's back to the whole game on VIX here is that you buy it at, 11, 10, 9, 8, 62. It's a bit pricey, but you know, come on, it is, right? Have you seen VIX go to 0? No, but you know, all of a sudden you're just play the happy place here. Bonkers. You know, here's a happy place. So if you buy it, you know, buy at 12, buy at 11, buy 10, buy 9. You know, you don't see that here. You know, all the time. Low and VIX go from here. Here's $3,000 if it makes a new low. That's how I look at it. But the flip side up in here is like 15, so that's 4. You know, if it's here's 9. I didn't even hit 9, so give it 4, right? So that's 13. So here's the happy place. So 1, 2, 3, 4, and on the flip side 1, 2. 3, 4, we'll cheat and go up to here at 17 and a half. So that's basically, I look at it, yeah, 50 grand or whatever. What is that? 1, 2, 3, 6, 10. So that's 10 grand. So that just leaves you with nothing. Okay, how many got commissions? Boop! I'm on margin. You puke up down here if you guys followed my thinking. You know, you buy, you lose 1,000 on the first one, you lose 2,000 on the first one on the second, you lose 3,000 on the first, 2,000 on the second, 1,000 on the third. Hey, look, somebody's math skills are getting better. Okay, so here's our Dow, the YM. Unless I'm missing something here, it's just resting in a happy place, but this isn't a very good pattern. We'll give it the bulls the best and say that this is a symmetrical triangle, but I don't like this. Something's not. Something smells in the Denmark. So I got some alarms here. But here would have to be the takeoff. Alright, I don't have time to go through the Dow 30 right now. Okay. Alright, so we have sideways action now. I remember we saw all the other bonds again, yeah. I'll just put in here short and faith. You know, whatever. What is that? 153, we'll say 153. You can short it too if you want, Kev. I'm going to shot it. Alright, because it's just, and going forward. So what do we have? So if commodities bottom in February, you're going to have, so you have a March. So November, December, January, February, March. So 5 months. Here's 154. How far is March from here? A great distance away. Daily, will that work for me? Daily will. Where are we at for March? March is over here. Here's the happy place. This is going to be short March if commodities are at lows. Or at February lows. Come on, Feb lows. Alright, low lows. So that'll stick there. Good, Kevy. What's this one here? That'd be a scary one. Short, hard. Oh gosh, could go up to here, 158. Oh, sure. First round of hard shorts. First round of hard shorts. This would be follow through selling. Run to the hills. The world famous run to the hills. Run to the hills. Corn, yeah. We're at 350. See, I'm hoping for 250 and 175, but I'm sure people who looked at the price of corn in the 1960s also were hoping in 1980 that it would get back down to what, 50, 60, 70, 80 cents, and that hasn't happened. Alright, so these are 5s. This is the front end. Yeah, but here's short. Okay, create alert. This would be short. Short 117.11. 117.11. One more time. What do we have up here? This is by Friday, but we'll take the high here. What happens if it goes higher? Well, then I'll update it because I have tomorrow off. Remember Banana Head? Does it have to be a stop? Because the thing will just be flying higher into March, just like you planned. Oh, stops. That's too close. Stops too close. Alright, let's do that anyway. That'll give me time to go. What was I writing? Okay, being oil. This is one that was kind of bothering me here too. But it's a possibility of a topper action here because of we have meal. Now this one, just like with gold, might have a reversal here. Alright, alert. Buy more March. Yeah. Got to get it up to 18 and 22. So this was a quick $200. Quick $200. And this is going to be a quick. What do we have here? What do I have? 14 and 20. Quick 600. Quick 600. Quick 800. Come on, you quick 600. Where are we at? Monday, Friday, Tuesday. We'll do this one. Export day, right? Alert single. Oh yeah, USDA. Quick 800. Higher USDA note taker. I can't hire enough people. Alright, and notes again. What's this right over here? Short. What day is this? Sunday night? It's short. Short. Hit this one at the end here. Friday. Short. Couple of Fridays. That's fine. Moving along here, buddy. Soybeans, see, so you have it coming back, a possibility of inverted head and shoulders, but it's iffy here. I had some news or something setting up twos. That looks like a goofy one. Wheat, just like with the Kansas City, kind of extended there. And we're back to A. All right, I'll talk to you guys later on today. Bye.